Good morning, welcome to this weekly market update from MRC Markets in London. What I'm going to do today is go through technical analysis on Euro Dollar, Cable, Dollar Yen, Dollar Swiss and Gold. We'll not be making any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on www.mrcmarkets.com. For any new followers, we have 3 moving averages on each of these charts. The red one is a 55 simple. The purple is 100 simple and the gold is a 200 simple moving average. Okay, let's have a look at Euro Dollar. First we'll just speak about what happened last week. It was quite a bearish week last week. In terms of the candlesticks, won't dwell on it too much, but there was a bearish candlestick, but it wasn't engulfing, so a lot of people still say that we're still in a slight continuation to the upside, especially if you flip it to the daily or the 4 hour. We spoke about last week the upside channel that was holding quite well, but we have now broken that just. But in terms of setups that I'm focusing on at the minute, it's all about on this 4 hour chart, the fib from the low to the high. You can see the previous fibs that worked very well on the upside channel with that low to high there, which got held at the 50% Fibonacci retracement, and then we have that other fib from the second dip, lows to highs there, which got held at the 61.8. So now we are in a new fib setup here from the lows on the 4 hour chart. The lows stand at 1 spot 22.88 and the high is 1 spot 27.47. You can now see that we're getting held at this 61.8. It didn't quite have a clean strike off that level, but what we are bouncing off of is the previous support to the left of your chart, which you can see that I'll just highlight it for you there. That's where we're getting held at now. So the I think the level is around 1 spot 24.70, which is just shy of that 61.8. But in order to get any sort of momentum to the upside, what we'll need is some sort of clear close above this 50% level, which you can also see acted as previous support. I think it was like last Thursday we did get a bounce off this 50% level. So the fib is obviously being looked at by a lot of traders because it's getting a good reaction. But now that we've had a daily candlestick close below that, in order to get back above that level, we'll need to have a solid sort of at least a 4 hour close above that 50% level. Let's have a look at Cable. On Cable, it's all about the key support around the 52.70s we've spoken about before. We've had a continued nice reaction off that level. Last week, similar to Euro Dollar, we had a very nice uptrend channel, which I think is still in play. I'll just redraw that for you. You can still see that's in play and holding very, very technically indeed. On this 4 hour, you can see that we're getting held at this 200 bar moving average as well. So in order to get any sort of momentum to the upside, we need to get a clear close above that level. In terms of the fib setups, the one I would be focusing on is from the lows to the highs there. Haven't quite had a clean strike off that 50%, but you can see that 100 bar moving average is holding currently at the minute, and you can also see that previously this 55 bar moving average held very good as well, and also it supported very well, and then we got that hold below it there, and now we get, so I mean the moving averages have been playing very, very technically on Cable. So yeah, in terms of the rest of the week, I'd keep that fib setup up, and if we're going to get, in terms of the daily, if we're going to get any sort of clear momentum, we need to get above that 200 day moving average, which we spoke about last week in terms of the selling opportunities. What we said was keep an eye on the fib from highs to lows there, and keep an eye out on the 50% and the 200 day moving average, and surprise we got held at the 200 day moving average. But it does look like it wants to come back up and test some new highs, so I would keep an eye on that previous fib and also the other fib, and just to keep it in some sort of context really. Let's have a look at Dollar Yen. Nothing massively of interest in this Dollar Yen chart. It hasn't been playing that technical compared to the other charts. There's much more interesting charts in my opinion. I mean, in terms of the daily, you can see it's all about the 200 day moving average, which is pretty much slicing through everything at the minute. We are getting a current bounce on today's candle. If you want to look at the shorter term charts and what we think could happen this week, one thing I definitely keep on your charts is this trendline support, because that's currently holding. I don't think the fibs have been playing out too well on dollar Swiss. They just don't react as well compared to other charts like euro dollar and cable. So I'll just keep it much simpler and just keep an eye on that trend line. And you can see we're also testing this 100 bar moving average on this 4-hour chart as well. Let's flip to dollar Swiss. In terms of the daily chart on dollar Swiss, we have this strong uptrend, which is still currently holding. We got a nice bounce off that last week, so we're still in this this long-term uptrend, which has been holding for quite some time now. If the sellers are in the market, then we'll definitely be wanting some sort of close below this trendline support. But then you can see with this cluster of moving averages here, so there's a lot of support beneath this. So the dollar is still getting a lot of strength currently, and it doesn't look like it wants to come back down. But something that is very interesting to dollar Swiss at the minute is that it has been having this sort of reverse correlation to euro dollar. So anything that's been happening on the euro dollar, if you flip it upside down, it's pretty much what dollar Swiss is doing. So on euro dollar, we had that fib, which I've just drawn here on dollar Swiss, was getting the support on euro dollar was the 61.8. You can also see around here that we're getting held at the 61.8. So keep that in mind, and if we get any sort of bounce on euro dollar, then I would not be surprised to see dollar Swiss selling off. So for this dollar Swiss chart, if we're going to get any sort of momentum to the upside, continue momentum, then we need some sort of daily close above this 61.8% fib retracement, in my opinion. But no, that's been a very technical chart. Dollar Swiss, quite like euro, but I basically think it's just much simpler to trade euro dollar. And if you trade dollar Swiss, then you might as well trade euro dollar, because it's just the exact opposite. Okay, that's the forex time. Let's have a look at gold. What do we have on gold? In terms of the sort of weekly chart, we've spoken about quite a bit now. The main sort of focus for me is this sort of 1560s level. We still had a weekly close below this level last week. The weekly candle was quite bearish, and it was bearish engulfing, but we didn't get a weekly candlestick close below that 1560 level. So the bias still has to be to the upside, in my opinion. But this current week candle needs to get some sort of traction to the upside to give the bulls some sort of confidence that we are going to get above the previous resistance. In terms of the weekly moving averages, the 55-week moving average stands at 1668, so we're still a long way away from that. If we flip it to the shorter term charts, you can see that we're still having higher lows here as well. So that's another thing that will keep the bulls, that'll give the bulls some sort of confidence going into the week. Yesterday's daily candle was very bullish, engulfed the previous candle. So if we're getting some more momentum towards the upside on this daily chart, you've got to keep an eye out for that 55-day moving average, which stands at 1604, and then we've got the 100-day moving average, which stands at 1631. I haven't really got much interest in terms of the fibs on this chart. I mean, if we draw from lows to highs there, it hasn't been reacting too well to the fibs. So the fibs aren't really in focus. It's more about the levels really, and just playing it simple on gold really. But definitely would keep that 1660 level on your charts. That's the big support, in my opinion. Okay, that's the charts then. Let's have a look at the forex calendar. What have we already had out today? At 9:30 am we had the UK public sector net borrowing figures. Came out worse than forecast at 15.6 billion. Forecast was 13.6 billion. The main headline news coming out today is the US consumer confidence numbers. And then on tomorrow we have core durable goods month-on-month numbers, forecast at 1%. And at 3 PM UK time we have the US pending home sales numbers forecast at 1.3%. On Thursday we have some more UK data out at 9:30, the UK current account figures. And then what follows that, we also have the final GDP numbers. Be careful on that, because it does says medium impact news, but in my opinion I think it should be high impact news, so I'm unsure what Forex Factory do that on their calendar, because GDPs are huge huge number. That's forecasted to stay the same at minus 0.3%. Previously was minus 0.3% as well, so not good numbers forecasted out of the UK there. All day on Thursday we have the EU Economic Summit, so keep an eye on any news out on the wires out from that summit. We also have the Italian 10-year bond auction, and of course of the weekly US jobless claims forecast at 385,000, previously was 387,000. And also what follows that is the US final GDP numbers as well, so quite a bit of data out on Thursday really. And on Friday we have a lot of medium impact news there. 9am we got some Eurozone data, M3 money supply. We also have the CPI flash estimate numbers. But the highlight for the day in terms of economic data is out of the Bank of England. We have Mervyn King speaking at 10:30am, and for any of you that trade the loonie, we have a Canadian GDP month on month out at 1:30. So quite an interesting week in terms of news. Not a massive amount of news, but will still be interesting nevertheless. Okay, that's all for today. I hope you enjoyed this video, and I'll catch you next week. Thank you.